The Bank of Korea has slightly cut the country's economic growth projection for both 2019 and 2020, though it still expects next year to be better than this year. Also, the BOK, in its last meeting of the year on interest rates, has decided to leave rates where they are. Yoon Jung-min has more.
Amid slowing exports and investment, the Bank of Korea revised downward the country's GDP growth to 2% for this year from its earlier projection of 2.2%. The central bank has also cut the projection for next year to 2.3% from its earlier prediction of 2.5%. But that's still higher than this year's projection, as the bank expects the economy and trade starting to pick up from next year.
We have lowered this year's growth rate by 0.2 percentage points from the projection in July, mainly because of the sluggish recovery in exports and investment. Next year, the growth is expected to slightly rise compared to this year, due mainly to better global trade and the semiconductor market recovery.
The central bank also predicted this year's consumer inflation to be 0.4%, due mainly to lower oil and agricultural product prices. However, it is expected to reach 1% next year due to lower downside pressure from the supply side. At its final Monetary Policy Board meeting of 2019, the Bank of Korea on Friday kept its benchmark interest rate unchanged at 1.25% for November. The all-time low rate remained steady following earlier rate cuts by 25 basis points each in July and October this year. The central bank has kept the key rate steady to wait and see what the effects are of the previous rate cuts. Exports continue to fall for the 11th straight month in October due to falling semiconductor shipments and slowing global trade due to the U.S.-China trade spat. Inflation remains far below the central bank's target of 2%. The low inflation has added to concerns over possible deflation, but the central bank and the government expect an upbeat sentiment next year, dismissing concerns over possible deflation. Yoon Jung-min, Arirang News.